Hello, today we will be going over Gemstar's financial activities from the past month and the impact it makes on the company. We will take a look at June's balance sheet, our profit and loss statement, and our statement of cash flows. Along with this, I will be recommending 5 internal controls, why they are needed, and how to effectively enforce them. Lastly, I will be recapping my learnings this month from business accounting. Now we'll look at June's balance sheet. Our current ratio is 1.60 to 1. This is a healthy ratio for our company and shows that we are using our current assets effectively. We are able to generate enough cash to pay off our debts when they are due and are managing our capital well. Similarly, our working capital is 1.60%. This means that we have been able to pay for all of our current liabilities while still having enough current assets left over and positive working capital. Our debt to asset is at 63%, which means that our creditors have supplied 63% of every dollar of Gemstar's assets. While percentages between 0 and 100% is optimal, it is still higher than desired. Should we continue with this percentage or a higher one, it could have a negative effect for the company and we could have trouble borrowing more funds, or we might need to pay a higher interest rate on borrowed funds. I believe we could improve this percentage, and we could do that by heavily focusing on our sales without increasing our overhead, and we could also issue more stocks to increase our cash flow. For our return to assets, we are at 7.27%. This is a healthy percentage and shows how we are using our assets to generate our earnings. For return to equity, we are at 19.24%. This is a good percentage for the company as it shows how effectively we are generating a profit, and it is a good percentage for our investors as well as it shows the percentage of dollars that have been converted to income. Next, we will be going over our June profit and loss statement and analyzing our expense accounts. Here, you will see the percentage and total funds used per expense account versus its budget. Initially, we projected our June event revenue to be at $15,000. However, we fell short of this goal and ended up using 76% of the budget. This is due to a couple of factors, which includes one canceled event and a couple of events that were cut short due to the California state curfews from the recent riots. These factors will affect additional expenses this month. Our depreciation expenses are on track this month, and we expect to fully depreciate our vehicle investment within our targeted time frame. Although we did not use the full monthly budget for this expense, we have extra money to either pay extra this month or roll over to following months should sales be low, which will ensure we remain within budget. For the equipment rental expense, we use 75% of our allotted budget. This is also due to one of the canceled events. For our insurance expenses, we used 92.31% of the budget for our liability insurance. This variance in actuals versus the budget allows the company to be safe in case of any unforeseeable problems. As Gemstar's income varies based on the number of events we secure, we decided to budget our interest expense higher. This is because the interest must be paid even if our sales are low. This month, we have used 38.89% of the budget amount. By budgeting higher, it puts us in a good position for the following months in case sales are lower than expected. We went over budget in our office supplies expenses by $66.66. This is because our supplier offered us a discount when buying paper in bulk. Although it made us go over budget, it will be cheaper for us in the next couple of months as we will not have to reorder again until August. We used 84.21% of our payroll budget and 73.33% of our utilities budget, both due to our canceled events and closing early from the California curfews. Our payroll expense is a bit higher, however, because we paid the staff for the work they did prior to the event cancellation. In our statement of cash flows, we will be looking at our operating, investing, and financing activities and examining a selected item in each. Within our statement of cash flows, our operating activities provided $4,653.12 of net cash out of the $50,700 total cash provided to the whole company. The negative $500 from venue deposit is significant as an event required us to put this money down to reserve the soundstage arena. It is important to note here that although we put this deposit down for an event, it will be added to our client's bill and so will be recouped. Our investing activities provided a negative $13,953.12 of net cash out of the $50,700 total cash provided to the whole company. This is mainly due to our investment in a vehicle, which was important and necessary for Gemstar's growth as it is used to transport our staff and equipment to events, which generates income for us. The vehicle expense will depreciate in 4 years. Our financing activities provided $60,000 of net cash out of the $50,700 total cash provided to the whole company. The common stock within our financing activities is important because it shows that investors believe in Gemstar's growth and success. Issuing this common stock has provided us an alternative to issuing debt and allows us to build capital. It is a less expensive route as the company could make dividend payments when we have the extra cash versus required interest payments to investors. Now, there are 5 internal controls I am recommending for Gemstar to incorporate into our accounting department. The first one is access controls. Access controls will give certain permissions to people within the accounting department. This will improve our controls as it will allow us to safeguard the company as each person would need to log in order to make any financial changes. This allows the company to have a history of login so that if an error or fraudulent activity happens, we could see who was logged in at the time. It will be enforceable when we set the system of access controls up, as no one will be able to view or edit financial information without their personal login. Next is required approvals. For large payments, increases in costs, and any unusual expenses, it is essential to have managers approve the transaction. When a transaction is more than a certain number of dollars or a significant edit is being made, the system should ask for a manager's approval code before it could be submitted. By doing this, it will improve our controls as it will reduce the chances of mistakes and fraud in the accounts because it will need to be signed off on. This will be enforced by the same system issued for access controls. We will be able to program the system to recognize these changes and require a manager approval code in order to submit. With the payment and reconciliation validation control, 2 people will be working together, but each will have separate duties. This is important as one's job would be to do the bank reconciliation and the other would be to cut the check. Doing this will confirm that the payee of the check equals what is recorded, and so will allow for checks and balances, which will help to prevent fraud. For asset audits, it is important to audit our assets on a regular basis to help ensure that the actual balance matches the accounting balance. This will improve our controls as it will help to minimize fraud and errors. And lastly, data backup. We should be backing up our department's financial data regularly on a backup server or computer. Our IT department is equipped with the tools and knowledge needed to do this on a regularly scheduled basis. This will improve our controls in case there is a data breach or a loss of our financial data. It will save the company time and money to have our data backed up so that there is no need to find the paper documents which could lead to mistakes on accounts or fraud when reporting. I have learned so much about accounting than I thought I would. I learned how to use QuickBooks effectively by setting up balance sheets, statements of cash flows, profit and loss statements. I learned how to do journal entries and to create invoices and pay invoices on it as well. I've also learned about the different types of budgeting, including the flexible budget. And I learned how all of these different types of terms and budgets and statements help a company succeed. Thank you.